where's all the talent in data science? And actually, it's online. It's not necessarily on Wall Street. It's all around the world. What if you could give away the data, but obfuscated, so they have no idea what they're predicting on? To a machine learning person, that description is not strange. They can just model the abstract data.
If I had my way, there would be no stock names. There would be no tickers. There would just be numbers. Everyone looked at me like I was insane.
The cool thing about Numerai is you can build your model however you want. We don't know what model you've got because you haven't given us your model. If my model does badly, you can destroy my stake. And if it does well, my stake will do well.
They discovered that taking the average of all people's guesses on a particular thing and found that the average was much closer to the actual weight. It worked very well when the contestant had to put money in.
So if you join and you stake $100,000, someone else joins and stakes $10,000. We will give you a 10 times higher weight in the final meta model. And if they do lose, it's fine because our portfolio is constrained enough, and then they'll get better because, hey, we just burned a bunch of models.
Well, hello, everyone. It's Jim O'Shaughnessy with yet another Infinite Loops. My guest today, I feel so simpatico with him. You're gonna learn out why that is. It is Richard Craib, who is the founder and lead portfolio manager for Numerai, which is a fund that is incredibly attractive to me, and you'll get it, and we'll get into that as well. He's been named to the Forbes 30 Under 30 in 2017 in finance. He has a BA from Cornell in pure mathematics. Well done. I love that. And you have a very unique hedge fund, which is using data scientists from around the world to predict equity prices. We're going to get into how that works and why I think it's such a cool way to set things up. I had a similar idea. Your performance has been ridiculously good, especially since you guys are playing on hard mode. You are playing with a market neutral fund. Again, doff my cap to you. I tried and failed to come up with lots of market neutral funds when I was still in the asset management game. Since 2019, your Numerai One fund is up 49%. And I think you've just added like a lot of money in 2023 because you did really, really well last year, which was a very difficult year to do well in. Richard, welcome. I can't wait to dig into this.
Well, thank you. That was a great introduction.
So let's get started. I'll play the Jeremy Irons character on Margin Call and say, Richard, can you explain this to me as if I were a golden retriever? Why don't you give an explanation that our listeners and watchers can grasp? Because this has been one of my passion projects, AI, for a long time. And we sometimes get lost in the jargon. So if you could just spell it out for us, first off, what gave you the idea, and then how the fund works.
Yeah, well, back in the day, it was around 2014. I was working as a quant at my first job and using machine learning to model data. And every single quant fund out there is in some form, gathering a lot of data, modeling it. What does modeling mean to a golden retriever? Well, it means, finding patterns in the historical data. And the trick is there's a lot of patterns and a lot of them don't repeat themselves. Most of them don't repeat themselves in the future. And so the goal of a machine learning model is to find patterns that will generalize into the future. And the best quant funds have managed to do that. And Numerai's unique idea, which is what I had when I had my first job, was, well, where's all the talent in data science? And actually, it's online. it's not necessarily on Wall Street. It's all around the world. And data scientists were meeting up on websites like Kaggle or playing in the Netflix prize. And I just thought, and it hit me very hard when I thought about it, it's like, there needs to be at least one open hedge fund, and hopefully just one, where it's like open source. It gathers the best people, they build amazing software, and that's what Numerai did for hedge funds.
And the reason that I'm so simpatico is when I was leaving O'Shaughnessy Asset Management after selling it to Franklin Templeton, my passion project was a thing I called Gray Swan. And it was going to do exactly what you guys have done. Except my thesis was, okay, so if we accept the definition of a black swan, that it can't be predicted, that doesn't mean that we have to accept the idea that it can't be confirmed. And much like you've done, I set up the system almost exactly. It's going to be worldwide. We were going to invite data scientists in. We were going to stake them. We were going to give them, I was going to spin up an LLC that did the trades, and they would get money from those particular trades. But then a good friend of mine who's a genius in AI, I tested the thesis on him, and we're going through it, and he's nodding, because one of my other points is, look, I think we've mined the data, the existing traditional quant data, as far as we can. Like, it's not a big surprise if you're looking at traditional quants like OSAM or AQR or LSV. Like, our models are very similar because we were using historical data, usually the CompuStat. Some people have additional data. And my dream, right around the same time that you had it and actually executed thank you, was we need new data. We need a completely different category of person and cognitive ability to make sense of it. So I definitely love the idea. By the way, he told me at the end of it, oh, by the way, Jim, do you have about $500 million lying around for the compute that this is going to cost? And I'm like, sadly, I do not. So I ended up investing in a open source AI company, Stability AI, instead. But that leads me to just a ton of questions because I love the idea. I love what you're doing. What gave you the notion to bring open source to Wall Street, which is a notoriously closed source kind of place?
It is. I had my first boss was amazing, and he was he helped me in so many ways. But there was one discussion we had that was kind of interesting to me, which was I was quite good at decision tree based algorithms, like XGBoost, random forest, these types of algorithms, and that's what I'd been doing back in 2013, 2014. But I had a friend who was studying his master's, and the best person I knew at neural networks at the time. So I said to my boss, I know a guy. He can help us. He's a student. He can help us. All we need to do is just give him the data. And my boss said, well, if you give him the data, you're going to lose your job immediately. And you'll be in breach of all confidentiality agreements in your employment contracts. Haven't you read that? And I said, well, wait a second. He's going to help the performance. Like, the reason we're doing this is to help the performance. Like, what if he runs off with the data? A lot of the IP is in the data. What if he runs off with the data? And so that was also a legitimate thing. So the really innovative thing Numerai did was, what if you could give away the data, but obfuscated? So you see a feature in the data, which is some characteristic of a stop, like PE ratio, but you don't say, this feature is a PE ratio. You just say this is feature 9. And then you sort of mess up the feature to a large extent that it doesn't even look like it's like a PE ratio. And then you can share it with anybody And anybody with data science background who might not know anything about value investing or Warren Buffett or PE ratios or anything, they can just get going because you've given them this clean, obfuscated data set. And there's no stock IDs in the data either. So they have no idea what they're predicting on. But that, to a machine learning person, that description is not strange. You have it's Google. They can translate, say, from Zulu to French, but they might not have on the Google Translate team a single Zulu speaker or linguist or anything, but they have the best translation for that language. And that's because they don't care about the underlying data or the domain of language. They can just model the abstract data.
And that is the genius here. I think we were going to do a very similar thing where we're going to obfuscate the data because talking to all the data scientists I knew, they're like, yeah, that's fine. That doesn't make any difference. And, you know, I used to make people's heads explode back in like the late 90s and early 2000s when I would suggest that if I had my way, there would be no stock names. There would be no tickers. There would just be numbers. And everyone looked at me like I was insane.
Yeah, it seems it's counterintuitive to take it out of the world that it's in and move it into an abstract space.
And that's one of the challenges is that, you know, semantically, we are so tied to language that you really fuck with people's perceptions who aren't data scientists, right? Because you've seen the idiocy of what happened, like it might be happening now with AI, but back during the .com, any company, no matter what they did, I think the classic example was a company on Long Island that made iced tea. And they changed their name to longislandicedtea.com and they went up like 100%. And
happened in the blockchain boom as well. People renaming energy companies to blockchain companies.
Yeah. So walk me through the process. Okay. So they get the data that is obscured. And then what's the next step? I know that you have more than 5,000 models, and they get fed into your main model. But take me through, how do you disambiguate, models that, as you mentioned at the opening, patterns that existed once and are no longer existing? How do you make the distinction between ones that will persist versus those that will dissipate?
Yeah. Well, first, the data we give, we definitely have to analyze. Like, we have quants and people who understand finance who are building the data so that the people who model it don't have to. And I've heard from one of my investors, Howard Morgan, who was early at Renaissance. He said, that is kind of how some quant funds work, and Renaissance probably one of them, where you have a separation of, like, there's the data team who maybe know a few things, and then there's the modeling team that deal with more abstract data. So that's sort of the setup. When you download the data, the cool thing about Numerai is you can build your model however you want. You can take our data, share it with other people, do whatever, but you could also choose any computing environment to use. So you might spin up a really expensive AWS server that trains your model. Or you might use your own custom language or library or train. You don't have to use Python. You don't have to use it. You could do anything. And then you start submitting to us your predictions. Now, when you submit your predictions, another interesting thing is we don't know what model you've got because you haven't given us your model. You keep your model wherever you want. So we don't know how you trained your model, but we do know you used our data. And that's cool for the users and sort of the open source spirit where you can keep the IP that yourself. You're not handing over the IP to anybody. And that's one of the reasons we grew. But for sure, there's plenty of users who sign up and then get confused. I mean, they expected it to be like quant thing, and they find out there's nothing for them to do. It's just for machine learning people, and very good ones. So yeah, getting to how do they not overfit? First thing is, it's a little bit our responsibility. We could put in very bad features. For example, features that aren't point in time. Maybe the earnings announcement is 1 day lag, and you give it at the wrong day, and then suddenly everybody thinks that's the great feature, but it's really just a look ahead bias. But then all the extensive techniques in machine learning, like the whole point of machine learning is you're going to use a nonlinear model that might overfit if you don't train it carefully. And so a lot of the users do things like cross-validation, different types of tests in the historical data to prove that they can train a model on everything before 2010, and it works for 10 years out of sample. And that's a very good clue that you're not overfitting.
And so tell me about the process. First off, actually, what has been the biggest impediment to open source, like regulations? How have your masters at the SEC, if you are registered, how have they responded to this?
We are a registered investment advisor. I probably shouldn't spend all that much time speaking about the regulations in the US because they do change, and but what we're doing is really about getting people to model abstract data. No one is giving us trading ideas. They're modeling our data and giving us signals. We can kind of see all of our contributors as data vendors. And they're not like we have different portfolio managers all around the world. We just have different data vendors giving us signals. And so that abstraction also means, they're not, for example, providing us financial advice or something like that. They're actually modeling our data. We're in charge of what we end up doing with the signals that they provide us.
Okay, excellent. So walk us through that end. You've got all of these data scientists sending you their signals. What happens within Numerai, and what does the team there do to make it a tradable event?
Well, yeah, all that I've said, worked for a while. We got all these users, they were building data, they were submitting models, and actually it wasn't working on live data. We couldn't trust the models because here's what you do if you're smart and a little bit naughty. You download the data and then you make 1,000 models and then you make 1,000 accounts on Numerai. One of them is going to work and win some money. So Numerai, we had to solve that problem. And the way we solved that problem is the way Millennium, the big multi-strat, solved the problem. You get skin in the game. You get the user to put up some capital, and what they're doing when they're doing that, we call it staking. They're saying, if my model does badly, you can destroy my stake. And if it does well, my stake will do well. So that limits the attack surface. It's like the only thing you can give us that will do well for you is a real model that works on live data. And ever since we came up with staking, which uses our own cryptocurrency for staking, things got a lot better very quickly. No one was making 1,000 accounts and hoping to get lucky because they would have to stake all of them. And they would lose on more than half of them, and then they wouldn't do that attack. So once we got that right, things got a lot better. And the way we end up combining all the models today is by taking the stake-weighted average. So if you join and you stake $100,000, someone else joins and stakes $10,000, your model, we will assume your model's better, because you're staking more on it, you believe it will generalize more, and we will give you a 10 times higher weight in the final meta model than the next guy. And when we combine all these with the stake weighted average, that final signal is called the meta model signal. And that's just a signal. It's not a set of trade recommendations. We then use our own internal optimizer to say, okay, how can we turn that signal into a portfolio that's neutral to every factor in the borrower risk model and other risk models we've found along the way, and then only expresses the core alpha of the model. And that is why, if a factor does badly, Numerai is unlikely to do badly because we're running neutral to all the factors.
That's absolutely brilliant because you're bringing together skin in the game, which has been repeatedly demonstrated to be a better, when they discovered that, taking the average of all people's guesses on a particular thing, I think it was the weight of a cow that got it going, and found that the average was much closer to the actual weight, and in fact, often closer than the winning single entry. One of the things that I was interested in when I was reading about it was it worked very well when the contestant had to put money in. Whereas if it was free and they could just take a guess, it did not work nearly as well. So I think that's quite brilliant. How do you then transfer? So let's make it me. And I come up with, through O'Shaughnessy Ventures, I've got a team here that is doing exactly this. And I think, you know what? I'm just going to send it over to Numerai, and we stake it for the 100,000 that you mentioned. And it works. How do I receive a payment from that?
So if it works, the way we score you is based on how good your model is at predicting residual returns. So we don't want to pay you if you bet on a factor, the factor does well, we consider that luck, and you get nothing. Sorry. But if you can come up with an alpha that's a proper alpha that's like neutral to all these things, then that's really good. So you might submit 5,000 predictions to us. And what tends to be quite good is about a 3% correlation with the target. So it's very low, right? But 3% of the stock market is very monetizable. So we evaluate your signal. It takes about a month for us to know how well you did. We evaluate you over a month horizon. And then we say, well, look, you have a 3% correlation with the target. So we're going to grow your stake by 3%. So you're staking $100,000. You'll now have $103,000, but it will be all in our cryptocurrency.
Got it. So, what is the output? And first off, so many questions. Have you ever seen the output from the meta model and just scratched your head and thought, "Oh my God, it's going to be really hard for me to pull the trigger on this trade," or are you just so comfortable with the way you're doing it that, like my advocating, it should just be numbers and not tickers, that you don't even notice?
We don't really, at this stage, we feel very confident with the process because it's been going a while, it's working. Also, we're buying a lot of stocks. I think our core fund, Numerai 1, has 1,000 positions, about 500 long, 500 short. So the fact that it's so many positions, they're all quite small weights, and there's no factor exposure, kind of makes you feel like, okay, well, you can tell what this type of portfolio will do. You can get an expectation of the variance or volatility of that portfolio. And then you do just kind of trust the process. Because, if thousands of data scientists, are staking these models and they together believe, after modeling the data for years, that it's going to work, kind of makes me sleep well at night, that they have a lot to lose if they provide us bad signals. And if they do lose, it's fine, because our portfolio is constrained enough that shouldn't be too bad. Might be sometimes bad, but shouldn't be too bad. And then they'll get better because, hey, we just burned a bunch of models. If you had that negative 5% correlation, we'll burn $5,000 from your $100,000 stake. And then you have a lower weight in the meta model. So it's kind of constantly improving. We don't think about it as like the worst thing that can happen with a quant fund is strategy decay. Great for 2 years and then flat forever afterwards. And Numerai, in some ways, is designed to be immune to that because we're always adding data and we're always adding models, and new models are coming in and out all the time, trying to update their models with the latest developments in machine learning or the latest data that Numerai is providing.
And is there a size limit to the amount of money that you raise through LPs that you have within the fund?
Yeah, there is, and it's somewhat of a moving target because a few years ago when we had a small data set and only a few users, we felt like we couldn't do that much capital against the strategy. But now we're up to about 350 million in AUM, and we think it can do quite a lot more, maybe up to 2 billion for right now. By the time we get there, we don't know. Maybe we'll have way more users, way more data, and start thinking we can do 3 billion. But the reason it's constrained is also that we use leverage, right? This is a quant fund. We use a lot of leverage on these sort of low risk portfolios, and that leverage is multiplied by the NAV. So we already have much more than $1 billion of positions just with 300 million in assets.
And leverage. I've always been wary of too much leverage. How do you make your leverage decisions? Is there a formula for that as well?
There it is. And it's related to how good we are at the risk management piece. There will be, think millennium strategies or strategies at Renaissance with 10 times leverage or more, but it sounds a little bit more scary than it is, because of the fact is, you don't want to leverage things that are high volatility. But if something is low volatility, you're much safer leveraging it. So when most people think of leverage, well, you know what? I think the S&P 500 is going to go up. So I'm going to put 2x leverage on the S&P 500. And I say, well, wait a second. The S&P has quite a few 50% or 45% drawdowns. And in those events, you're going to lose everything because the volatility of the S&P is quite high. But if you can do something else, like, well, what if you were long Apple and short Microsoft? Now, these are both US companies. They're both exposed to tech risks. They're both exposed to AI. They sort of have some similarities. Well, maybe that portfolio you can leverage a little bit. And so that's how it's thought about.
And what's been the reaction of the various groups, the usual suspects for market neutral funds, institutions, endowments, etc., wealthy individuals, family offices? Is there one type of potential client who embraces this more enthusiastically, if you will, than others?
It's a good question. I mean, we had a very interesting start where Numerai became quite famous because it's very unusual idea and we were using machine learning, crowdsourcing, even cryptocurrency. And it's like, is this even real? How does this work? So a lot of people wanted to meet us in the early days. Like, we could meet anyone, talk to the top allocators in the US, but no one wanted to invest because we didn't have a track record. And that is a little bit how the industry works. Well, a lot how it works. And the venture backers we had, because we had VCs invest in us, like Union Square Ventures, they loved it because they're like, hey, this is going to be, in the long term, this will be quite good. But the LPs are like, well, let's see a few years. So the story was, after 1 year or so, we off track. We started to get quite close with a Canadian pension fund to invest, and they are considered, very important quant allocators and allocators generally because they actually have a lot of savings over there in Canada, and they're sophisticated. So they looked at it and they said, well, let's try it. So they came in for $20 billion, which seemed like a huge amount at the time because the fund was only about $20 million. And that investment took us to $40 million and was our first institutional investor. And since then, performance continued. And we then ended up meeting with endowments, and a couple of other European fund of funds, and now we're up to 350 million with the Ivy League endowment, with Canadian Pension Fund, and some of the top allocators you have for quant. But it did take many years. You could have a quant that just hated. So you could have an allocator that just hated quant altogether. I don't like anything black box. Okay. Then you could find an allocator that loved black box strategies, but they hated crypto. And we were paying our users in crypto. They didn't like that. And then you have someone who's really likes quant, but they don't like machine learning. And so we had to kind of get 3 for 3 of these things, and it was very challenging. But I'm glad that the industry, kept up with us and looks at our performance and tells us they like it. And I think we have a long way to go.
Talk a bit about, you mentioned you have your own cryptocurrency. How does that work?
Yeah, well, we started to actually pay our users with PayPal. And we were trying to pay one of our contributors who just won $300 or something like that. And he said he was in India and that they didn't have PayPal. And at this point, there was no consideration that Numerai would ever use cryptocurrency for payments. But this user said, could you please just send me Bitcoin? And this was a $400 Bitcoin at the time. And we're like, sure, it's very easy for us to send you Bitcoin if that's better for you. And that's how we sort of got started with paying in crypto. But the reason to make our own cryptocurrency was to do the staking. I mean, not many people had even heard about staking in 2017 when we started doing it. And it's the exact right technology for this, because if you ask a user, please wire me $100,000 and I promise I won't steal it. That's not as good as a blockchain system that says stake your model and like we can't touch it because it's part of the stake. And so it really was the right thing to do. The other thing is burning. If we want to burn your stake, you can't burn US dollars. Like, what are we going to do? Send the user a video of us burning their money and be like, you lost. It doesn't make sense, but burning is a natural thing in the blockchain. You take some of the cryptocurrency, you send it to the zero address, and then it's gone. It's out of circulation. They can tell we didn't take it from them. We're not benefiting from anyone losing money on Numerai. It just goes straight to the zero address. So I thought it was the perfect use case for crypto. And we also had a very technical user base who could get their heads around all this stuff. So we launched NMR in 2017. And that's what we've been using ever since.
And now you have maybe changed your stance on crypto in general as an investment, right? You sold your Ethereum and I read some other stuff. Any reason for that?
Yeah, I do. I do hate a lot of crypto stuff. It bothers me. I mean, I don't like, for example, I think it's quite good that maybe there are way fewer ICOs where you sell cryptocurrency to the public, because I do think there's a sense in which public might hope that the thing goes up after they buy it. And Numerai, when we created NMR, we actually gave away the NMR for free to the users on the platform. And that was the right thing to do because we wanted them to use it. We didn't really care how valuable NMR was. We just wanted people to stake it for like the purposes it was designed for. And I think crypto did become quite a, just like it's kind of sad when someone makes a lot of money in the dot-com bubble and then loses it all and uses leverage, or now with crypto had it all on FTX or had it all in Luna. And so those types of things are quite disappointing. And I still, believe in crypto in the sense that I think it's a really easy way to pay people, really good way to do staking. But the other stuff is quite bad. And then from the investment perspective, it used to be this really uncorrelated, weird thing. When I bought Ethereum back when it started, and it was like the strangest bet I had in my portfolio. Who knows what this will do? And then it actually became like very correlated with just the Nasdaq or the emotional, dysregulated crypto traders. So that made it less attractive as an investment.
Switching gears, many of our listeners probably would, when they're hearing what you're doing, the first group that might come to mind would be Quantopian, which ended up failing. Tell me how you're very different than they are versus the techniques that they were trying to implement.
Yeah, I mean, so I liked Quantopian, and I think many people used it and tried it out. The biggest thing with them is they basically started the company before machine learning. Like they started around 2011, I think, and things weren't really clear about machine learning being very important and a very good way to model. So what they did was build a community of quants that actually wanted to be able to write a hand-coded trading strategy that said, I'm going to buy Apple this day, and then I'm going to be short tech, and then it's just like a rules-based algorithm, not a learning algorithm. And you could run a back test and see, wow, that rule I made worked really well. But that wasn't like a deep result or a result that was going to generalize, that you just happened to choose the growth factor for a few years. And the growth factor by itself had a sharp of 2. So you seem like you have something. So Numerai really took a much more mathematical, technical, machine learning approach. And the final thing is Quantopian never had staking. They were also started a little bit pre-blockchain. And so they didn't have staking, they didn't have skin in the game, didn't have machine learning. And that's together made it very hard for them to succeed.
And now, tell me how you would go about improving your process in terms of the research you're doing, et cetera. What does that look like?
The biggest piece of research, the two, is data and optimization. So data is the input to all the models. If we give out bad data, it just simply won't work. There won't be any way they could be made to work, no matter how good the algorithm was. So we spent a lot of time trying to solve the problem of, well, the way other quant funds do data is they have a lot of different teams buying up different data sets and analyzing them. Numerai said, well, we want to be way more capital efficient. Well, let's build something which we call the feature assessor, which takes in arbitrary data that we buy and just really disentangles whether it's going to work. And so if all we do this year and next year and the year after that is if we double the data set and we double the number of models, those two simultaneous doublings are all we need to keep doing to get to be the best. So that's what we try to do every year, kind of for the last 3 years. Just like we have a system that works from the incentive design standpoint. Let's make sure we grow the data and the people talents. the final one is optimization. It's a very subtle thing. Maybe maybe if you take your feature exposure down to zero, you're spending a little bit too much trading costs just on the rebalancing trades. Could you maybe soften that without taking on more risk? And there's so many considerations with that as well. But the core is more data, more users.
And tell me what types of data you buy.
So we do have quite a skew in the data set towards data that's long. I think you're right to say that things like the basic factor models of the past might be kind of in trouble for the future, because those are basically just known risks. There's gigantic ETFs now that expose these risks, and maybe you can't bet on them as if it's the 90s. But it doesn't mean you don't want those factors in your data because they're very important. They do drive variance in returns, even if they're not predictive of returns. So we give out a lot of data that goes back very far, as long as we can go, like usually about 2 decades, and covers the whole 5,000 stock universe we have. And if we can cover that universe and go as far back as possible, that's when machine learning works. If you told me you had some special credit card data that you bought from a startup, something, and it only starts in 2020, that's not going to be a great use case for machine learning. You must know from stability, you need a lot of data to get these things to train. So, the stock market is kind of a small data problem that we're trying to make it into a big data problem by going as far back as possible.
Do you see this ever leaving equities and going into other asset classes?
We have some very good engineers, and some of them have worked in places that trade futures and other currencies or things like that. I've actually been quite firm on sticking to equities until we get to capacity for equities. And I also like equities because of the breadth, because of the amount of data. Maybe there's only 80 futures you can really trade with size. So you don't have the breadth, and you have to come up with a whole new style of doing the forecasts, like directional trading instead of cross-sectional trading. So I think it's been good that we've stuck with equities. There's plenty of complexity in equities to get your head around.
Do you think that there would be any value in kind of the traditional quant sense? You mentioned, and I know much more about it now, since by association with stability, the need for lots of data as opposed to small amounts of data. Do you think that there would be any benefit to, hiring a project? For example, we were looking at recreating the Moody's manuals back to 1900. Where right here in the New York City library, they have them all. Would that be of any benefit, do you think, here with your system?
Well, I am very interested in large language models, obviously, like everybody else. And there's people at the firm that are familiar with it and can build these models. But I do think there might be a way to do it in a way that's like kind of profound. Like if we've got very good at understanding the sort of shorter term details of the market, we have prediction horizons that are about a month long, and they maybe aren't that good at longer than that because they don't really understand the company. They understand all the features and the properties of the company, but they don't know. They haven't integrated the whole of human knowledge with respect to that company. So I've actually been working with a few Numerai users and thinking about this for a while. And I think there might be a way to have that take us to the next level. I want Numerai to be the absolute best at LLMs with respect to the stock market. It's a little bit like maybe with crypto, where I knew we needed to have our own crypto and do the crypto thing. I try to focus and stick to the core business. But sometimes something comes along that's like, ooh, this is now getting really exciting, and we've got to dedicate some resources to it. And I think we can do a really good job turning text-based data into incredible new features for the Numerai users that are very uncorrelated and different to what they have right now.
Have you noticed any inferences that you can make about the type of model or the type of data scientist who is you know is it just contingent on the amount of their stake, that the attention you pay to them, or are there any softer non-mathematical things that you look for in the data scientists that are helping you with this?
Yeah, it's been very hard for us to beat the stake-weighted meta model. We've tried a few things, like we looked at, well, if this person's done extremely well for the last 6 months, why not give them a little bit more weight? And it always is right before they have a drawdown, and it actually their own assessment of what their weight should be is coming through their stake. So it's very hard to beat the stake-weighted meta model. We do meet our data scientists. I mean, we know a lot of the top ones. They come to our conferences, or they chat with us on Discord and on our forums. So we get to know them, and some of them have very interesting backgrounds. One user used to be at NASA Jet Propulsion Lab, and another user at CERN. Another user works at NVIDIA on machine learning. So you have this amazing set of people, but still, we don't have any better way of deciding who gets to be in the meta model aside from staking.
Yeah. And that's actually quite an elegant solution as well. Because it removes all of our biases, et cetera, that in our human OS, which I've found often is the biggest problem in trying to put these types of things together. So your overall goal perhaps is, you think you might be able to get as high as 2 billion in the fund. And you are in fact looking at other asset classes that you could potentially find models that work with. You had a quote which I thought was great, and I want to ask you about it. Basically, your master plan is to monopolize intelligence, monopolize data, and then money, and then share it. I'm getting that wrong. I wrote it in haste. Maybe you give me the actual quote, but why the open source, the affinity for the open source?
Well, to monopolize, so that is our master plan: monopolize money, monopolize data. Monopolize intelligence first, monopolize data, monopolize money, and then decentralize the monopoly. And so to monopolize intelligence, that's sort of talking about the talent. How can we be really quite definitively the hedge fund with by far the most talent? And you might say, well, the way you do that is you have to raise maybe $3 billion and somehow start hiring all the best talent in the world one by one and putting them inside an office. But the way we thought about it was, if you have an open hedge fund that pays well and it's fair, then that is the much better way to do this. And so that monopolized intelligence is some way the goal we've got the furthest towards, because I do think we are going to keep growing and adding new talented users. The second one, monopolize data. I would actually suspect Two Sigma, with all the money they have and time, have more data than us. They probably do, and that can't continue. We have to catch up eventually, but we're doing a lot per unit data that we have, and we're building this feature assessor that can onboard data as fast as possible. But with the data plus the intelligence, you start building this sort of monopolized money plan, which is if you have the best performance, people will come. And for the last few years, there are a number of very high profile, machine learning funds or quant funds that we've really definitively done quite a lot better than. And so slowly allocators reweight into us if we can keep that up. And the decentralized one, final point of the master plan, is just like, if you did have a system like this, which had all the data, all the talent, and was like an AI super intelligence allocating capital around the world, wherever it's needed and most effective, then it's like it'd be nice if somehow people would own a share of that. And that last part has been hard to do. And I haven't really, I don't know the right vehicle. I've often thought, well, what if Numerai had an ETF like ARK, except with all the Numerai holdings? And it's actually tricky because you can't do an ETF with longs and shorts and leverage. Maybe we can have a holding company or an insurance company one day. But these are also quite tricky and expensive. So but trying to focus on the near term, getting to that 2 billion of the fund.
I love the way you break it down. What could go wrong?
I mean, yeah, it is. There used to be a lot of answers to that questions, and there now fewer. I do think the US. It's quite hard to read whether the US wants this type of company. I mean, I love America. I immigrated to America because it's my dream to start a company here, and there is a lot of discussion about more regulations that make it much harder to do these businesses than it used to be in the past. I look back at, say, Ken Griffin is starting a fund in Harvard dorm room and being successful. And you think of how huge the barriers to entry are to play this game for real nowadays. And I think that's quite sad. And Numerai in some way lowers those barriers, right? Because suddenly you don't need to go and spend $1 million a year on data. You can use Numerai's data, and it's free and it's clean, it's ready. And so, you only need $1 to stake on Numerai, but you need $10 million to set up a proper prime brokerage account. And it's like, this isn't that good. I do believe in markets, and I do believe we want to have the US always have the most efficient markets and have bright people's intelligence applied to them.
100% simpatico on that. I love this in so many ways. And that is one of the ways that I really love this, the ability to empower very, very smart people to not have to have that 10 billion or 10 million, where they can actually apply their intelligence immediately. I am so supportive of that, as well as the outcomes. How do you deal? Are they formally bound to you through a contract? Are they what are your data scientists within the organization?
Yeah, they agree to our terms of service on the website, and those are quite specific in certain areas, but also very free. Like I think it says explicitly, if you submit predictions to us, they become our predictions. But the model you use to train, that's yours. You own the IP and retain the IP for that. And so, yeah, there isn't too much. The whole point is to bring the friction down for contributions to the system. And I would say that some startups, I'll say Robinhood. I don't like Robinhood, but I'll just talk about Robinhood. It's like, you can't say you're democratizing access to the market, and actually, you're not. You're actually making it's very easy for ordinary people to lose money, because they don't have an information edge, and you're selling them options with like 100% annualized volatility, which will be zeros in the next drawdown, which is inevitable. So I think Numerai is a little bit more like, let's democratize access to the market, but in a way that's like honest about how hard it is to participate in the market. Like, you have to have a really good data set, and you have to be really good at data science to help our quant fund. So, but your contributions are actually being used to power our hedge fund.
Have any of your data scientists tried their own startup? Basically, as you mentioned, they keep the IP of their model. Have any of them said, "Thank you, this has been great, but I'm getting funded by O'Shaughnessy Ventures, and that's where we're going to go"?
Yeah. The important thing is, once they've trained their model, for sure they've learned about data science and they've learned about how to solve our problem. But their model obviously won't work on other data. It's designed for our data. They don't even know what the model's predicting or what the features are. But still, it's possible they could become very skilled and then say, you know what, I'm done with Numerai. I'm going to go work at a big hedge fund. But for most of our users and the types of users we have, it's typically kind of like they're working at Meta or Apple or as machine learning people. They don't want jobs on Wall Street. It's the last thing they want. They want to be able to have the flexibility and freedom to come to Numerai whenever they want. And so I think it's not really a risk, but I do think people are learning things in Numerai that they're applying elsewhere. And I think that's great.
Yeah, and that was a big part of, I mentioned the idea for Gray Swan. That was the model. It was, we don't want you to work for us. Enjoy your job wherever it happens to be. This is going to be something that you can do or not do whenever you want to do it. You can use the resources for other things. You can get other insights. And I have some old school lawyers who like literally almost have aneurysms when they were looking at what I was doing. But in terms of IP, for example, you obviously own all of the IP here, right?
Well, we don't own any of the IP used to develop the model. If you trained a neural network with a special transformer architecture that you've read in a new paper, that's all that code is yours. You never send it to us. What
Right.
you send to us is the predictions. So in some ways, it's more like you own all IP, but we're licensing some of the predictions.
Yeah. The other thing that I love about this is, in many ways, if you abstract it even further, it becomes this idea of sort of smart crowds, which I'm very enamored of, and that also changes the very nature of traditional capitalism and traditional markets. Do you see any extensions of this type of process that you've developed specifically for a market neutral equity long short? If I was going to ask you to speculate, where would you see this? What are the nearest neighbors where this type of process could take off?
I think it would be very hard to do it in another industry versus finance. Like if you had people have said to me, look, if your approach is the best way to do machine learning because you have so many different models and they're all ensembled together, why wouldn't someone want to put like healthcare data or something and model that data and get the best results? But I think many problems in machine learning are basically like solved. Like if you want to make a model that predicts generates images, there are ways to do that, and they're like extremely good. And if you want to make a model that does like face detection or something to do with images, it's typically you use like a convolutional neural network. And then that ends up being like state of the art with just one engineer working on it. So for most problems, they actually are kind of solved because they're working in a space where the data is stationary. Like that's the difference with the stock market. It literally is changing all the time because of market participants and new data sets and new information coming into it. So that's why it's especially good for this. And I don't think you could benefit that much from doing crowdsourcing on other data.
So, if I ask you to tell me, you already have quite well articulated the grand plan. But other than regulators screwing things up, is there anything within the process that you could see, for example, blowing up?
Um, yeah, I mean, there's always it is possible, for quant funds to have bugs, right? I mean, I don't think the Two Sigma marketing department or other funds would say, email all the investors, guys, we found a bug today in our trading system. But they're obviously happening. It's not like immune from all the problems of software and bugs. So, there once was a time where we released a handful of features that we shouldn't have released. They were dangerous features. Now, it's possible that some of our users might have figured out that they were dangerous or strange in some way. They looked really good and they stopped working, and they could have figured that out and maybe taken them out of their models. But our kind of promise to our users is that we're doing that type of test and they can just go ahead and model it. And we ended up finding this out, and we're like, whoa, how did this get in? And we found a kind of a bug. And we wrote a forum post about it, telling all our users, these features are kind of dangerous. They won't be in the future data releases. And they might have hurt performance for a little while. Not a lot, but a tiny bit. I mean, these are 3 features out of 2,000. It's not like catastrophic. But it is it's such a high precision game, quant finance, that, it's sometimes when an engineer joins and they're used to sort of hacking on a website, we're like, okay, no, this is a very different game. Do you realize when you push that code, it immediately influenced $50 million of trades? And this is like a science. And so more and more the people we have are experienced in this environment. We have one engineer who talks about how at his old job in the UK as asset manager, I think there's a special term in law for it or something, where he can basically go to jail if he makes a mistake. It's not about like, it's okay to make mistakes. It's an environment that's like, this is a danger paid job. You're an engineer, but this is a danger paid job, and you can't make mistakes. So it makes for a very different environment. You end up becoming a very slow hedge fund if you start caring at that level. But these types of things do happen. So I think that's always one thing to worry about. And then the market, although we're modeling the market and the risks in the market, we don't know what it will do, right? Every day we don't know. And what you want is your volatility estimates to be the same in the future as they were, as your estimates are saying. But if there's even slightly different, suddenly you're like, well, the back test, we could have a drawdown of this magnitude, but in live, we end up having a drawdown a little bit bigger. Why did that happen? And you might not even be able to diagnose that. But yeah, the fact of running so much concentration in our portfolio, even if we're not factor neutral, we're still not immune. If another COVID-19 were to happen, that's actually a really tough time in our back test and with many quant funds. We don't go down nearly as much as the market, but we do go down, and everything we look at, we don't know how to hedge out that risk. So if that happens again, that'll simply just happen to us again, because not every risk is hedgeable.
What's been your biggest drawdown with the live money?
We are having it now. How exciting. You heard it first, yeah. One reason is it actually looks competitive with the COVID-19 drawdown. One reason is the fact that we increased volatility on purpose. Right, we wanted to take on more risk now that we're comfortable with the system. So we've sort of, in the past, we were running on sometimes as low as 7% volatility, extremely boring fund, grew it to 11% vol. And then when we released new optimizer settings, which just came out after the drawdown, I should say, they're going to take our forward vol to something more like 15%. So in that type of volatility, you can expect 1 or 2 months to be quite large in drawdown.
And what specifically was the percentage drawdown that you're having now?
I'll tell you, because it's going to be live on our website in a few days. But basically, we went from we're this month of May down about 10%.
Wow, you got me ready for a much bigger number than 10%.
It's like, guys, secretly. No, I know it's 10% sounds pretty chill. If you've ever invested in venture or crypto, or it doesn't bother you at all.
No, that's like not even an hour.
But for us, it's they've never had a month that big. So
interesting.
Hopefully, it's as rare as the past, but we never know.
Well, Richard, this has been absolutely delightful. I love the fact that you are doing what you're doing. I'm a little jealous, I will admit, because that was going to be my prime vertical in O'Shaughnessy Ventures.
You had a good idea.
Yeah, well, I had a good idea, but you are implementing a good idea. And there's a big difference between having a good idea and implementing one, because a good idea without any action around it is just a daydream, as opposed to an actionable item like you've achieved. This is absolutely fascinating. I will watch your progress with great interest. At the end of our podcast, we do this with all of our guests, and so I'm going to do it with you. And that is, we say that we're going to make you the emperor of the world for a day. You can't kill anyone. You can't put anyone in a re-education camp. But what you can do is we're going to hand you a magic microphone, and you can speak 2 things into it. And what's going to happen is the entire population of the earth is going to wake up whenever their next day is, and they're going to think, I just had 2 of the most brilliant ideas, and I'm going to act on them. What 2 things are you going to incept in the world's population?
This is super cheesy and lame. The first one, just like, life is long. Like, I'd like knowing that life is long and the repercussions of that, like be healthy, take care of yourself type of thing. Because that's one that's very easy to forget for people who are hard workers. And also there's the life is short meme, which I think is dangerous for an investor. And then there's AI is not going to kill us all.
On that one, I absolutely 100% agree. I am usually quite patient, but watching some of these, the hysterics, is very difficult for me.
It's wild.
Yeah, because it's all the worst parts of human OS bubbling to the top.
Yeah. Have you heard of the cognitive distortion catastrophizing?
Yeah. Yes, I am. And I'm watching many people who Hey, the one that really kills me, or the few that really kill me, and I won't name names, but there are some people who I had tremendous amount of intellectual respect for, that I have seen that intellectual respect for those people get chipped away rather brutally.
I know. Oh no.
But as you say, life is long. We will watch with interest. Tell us where our listeners and viewers can find you.
You can find me on Twitter, Richard Craib, Craib, and at Numerai. And you can take a look at numerai.ai.
Terrific. Well, Richard, I wish you the absolute best. I'm, as I said, a little jealous. I think it's a fantastic idea, and I wish you the greatest of success. And thank you for coming on Infinite Loops.
Thank you.